Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, July the 10th, the year's 2020. Let's talk trading. It's time for the weekly wrap-up. But first, let me just say that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, always have your risk management in place. Do not lose more than you're willing to lose on any single trade. Brain management. Basically, get your brain in gear. Get your mind right. Okay, for the week, we still have 3 gaps that didn't fill. So most of these paid off, but these, obviously, if you were trading for the fill, did not fill. The pound dollar's putting in a new weekly high here this week. Right now we just pulled back 20 pips. Actually, it's not putting in a new weekly high yet. Yesterday it put in a weekly high. My mistake. But you can see that we definitely broke out of the Monday high right here. And we've got 1, 2, 3, 4, 5, 6 green days in a row so far. Up 251 pips for the month, but we're still down 595 for the year from the open. Breaking out of that monthly high here. Once again, if you traded this yesterday, you had another opportunity right now. You'll be up 5 pips. And this was the monthly inside bar that occurred 3 months ago. On the daily, tight ranges. It's Friday, I guess maybe traders are taking a day off. No pairs over 100. As far as the buy zone, we took out that missed pivot from yesterday. And we took out today's pivot just a couple hours ago. And red rats, you might start thinking about getting some cheese here. As you can see, the rat zone just pushed up. Once again, we took out the pivot here. This is, we just hit the daily R1. But as you can see, we missed the weekly pivot. Took out the daily, took out the missed one from yesterday. So now we have one missed one here from last month, one missed one from this month. And just so make it complete, there's that weekly pivot we missed here. So that's the only one this year so far. So maybe look for this one to get taken out, possibly next week, possibly next month, possibly never. Huge wick zone from yesterday. You can see price cut through the lower wick zone, but the upper wick zone was huge. Price is acting like it wants to get through here. We'll see what happens. The range, look at this H1 range, 39 pips at the 97 percentile. But the daily's only at the 20 percentile, 87 pips. Yesterday we only had 81. So you can see here this week, only one where we were over 50% on the percentile, meaning for those just tuning in, what this means is that 55 bars out of the last 400 were less than 130 pips from high minus low. You can see here on the daily, high minus the previous high, 37 pips. We're at the 99 percentile for the H1 range. So that's huge. And we looks like we just crossed that 50 line by about 3 pips and starting to pull back a bit. Yesterday was really interesting when I was making the video on the step-by-step, because as I mentioned, I couldn't have planned it any better. But you can see here, if you had followed what I was saying about being a trained monkey, this hour you would have picked up potential 10, 20, 30 pips if you stayed in the trade. Previous hour, there was 10 pips or more to the upside and a few pips to the downside. The hour before that, 2 hours ago, there was a few pips to the upside. There was over 10 to the downside if you stayed in a trade. So then you can see here, if you went long, actually if you went long at the line, because these lines change every hour depending on where price is. But right here, see, you would think, oh, wait a minute, I would have lost. No, because this line would have been green, this line would have been red. So once again, price at the line would have paid off. And here you go, we have an open, price at the line paid off, an open, price at the line paid off. Now this one, let me show you something here. The low was 80.3. It didn't quite get there. If you rushed it, you got your fingers burned. You got to let price get to the line. You see, that's part of being a trained monkey. Because if it was a computer program and it said go short at 80, it never would have filled. It didn't hit it. So you can't rush it. Just do not rush those trades. Okay? So that's a little tip there. Because actually, what some people like to do, they like to see it break it slightly, then come back and then come in on the second or third touch. But as you trade a pair, you'll get to know its habits, what it usually does, and you'll be able to decide when to enter the trade on the first touch or second touch. The thing is, sometimes there's never a second touch. It touches it, goes through it, and never looks back. I think that's what happened here. So for the week, I hope everybody had a profitable week out there. I hope you learned something useful during the trading step by step for this week. Oh, and I'll be doing some more next week, so that series is not over yet. Probably have at least another 4 or 5, maybe 6 videos to shoot in that. But as I said, it's really nothing new. But sometimes when you go over something, you might state it, or I might state it just slightly different. And that difference is what maybe makes the light bulb go off in somebody's head, or maybe it causes that aha moment, or that feeling of getting hit by, a ton of bricks, where it's like, oh, yeah, now I get it, finally. And as you can see here, price is pulling back off of that high, went right through the 50, coming down to the 40. So there might have been some red rats feasting. Let's just take a quick look here. Actually, red rats might have been using M5. So there was an opportunity here to either get short after covering that candle there, breaking out of that low, or an opportunity to get short here, which would have given you a few pips, or possibly you'd be waiting for your stop, and then right now you'd be back in the positive area. But you have to be careful on these reversals, definitely. And remember, once again, if you're having a hard time, move up a time frame. So for example here, you'd be sitting on your hands if you were a red rat because the H1 is green. So we've only got about 5 minutes left here in the hour, 6 minutes and 53 seconds. So what you would do if you're a red rat and you're having problems, you're just going to wait for this H1 candle to close. Let the next candle, H1 candle, open and wait for your opportunity for a short. Because chances are that next candle might try and cover this area. Let's go down to M1 and see if we can see any clues here. As the computer takes its time. But this is something we have to learn as traders, and that's patience. Because if you think about it, you don't make any money doing anything when you're trading, because see, after you put the trade on, the market does it. It either gives you an opportunity to take profit or not. So sometimes the longer you wait, the better the opportunity. So here we are looking at M1. And so you can see here, you got a double tap right there. And so it broke out of that low. And there was your opportunity. And here, you see here, it broke out of that. That was the high at the time, broke out. There was a little opportunity there. And so a lot of times when you're in the rat zone, you might just pick up, just if you get to 3, 4, 5 pips, because especially if you're trading against that H1 candle color. So you can see here that strong move up. And so what do you see here? You see it, and then it comes back. Then you see a little consolidation. Then you see that breakout to the upside. More consolidation here, breakout. A little bit more, breakout. Then you can see here it ranged, popped through, started to consolidate again up here, and you can see the breakout. So when I say consolidate, it's like you see here, it kind of was in a range. It went up, it went down, it went up, it went down. And it went up a little bit higher, came back down. You see where it came down to? Kind of the top. It's like it's making, like it's laying a brick. So like right there, there's a brick. Right there, there's a brick. And then right here, you can see there's like another little brick here. Then all of a sudden it came all the way back down. It's about this area here, you see. So this area, once again, was consolidation, came down. There were some buyers waiting here. And you can see there was buyers waiting here because it pushed it up quickly. More consolidation, and it pushes down. So whenever you see a quick push up like that, usually price is going to return that to that open. See how that worked right there? So that's just a clue. But anyway, once again, I hope you had a profitable week. Remember, these videos are for educational purposes only, and your results may differ from mine. And I hope you have a safe weekend. And when you sit down next week at your trading platform, just remember it's not what you trade, it's how you trade it. So go out there and drain the banks. Rumpled One.